Kia ora and welcome to episode 52 of Bridge Talks Business with Milford. Great to have your company. The big question this week is how low will they go? Interest rates are falling. We've got a double whammy hit from the Reserve Bank for October, and next month we've got another meeting. What are the markets telling us about the chances of a further cut, maybe 25 points? What data should we be watching between now and then that will inform the decision? We'll look at that on the show today. But first, here's your top 5 business bits. Number 1, tariffs are back. Trump's announced a further 100% on China effective 1st of November. It's all over rare earth minerals again. Unsurprisingly, the rhetoric was toned down over the weekend, but the announcement certainly took investors by surprise. Number 2, stock markets took a hit after this. The worst single day performance since April for them. Crypto took a bloodbath. Gold managed to rally as investors continue to seek alternatives to regular currencies. Number 3, the Reserve Bank over-delivered with that half-point cut to the OCR. More stimulus and looking through inflation. Bonds continued their rally. The Kiwi dollar continued to fall. Coming in at number 4, French politics continues to confuse everyone. Recently resigned Prime Minister Lecornu was reinstated as Prime Minister just 4 days later, but the situation remains a mess. French bonds continue to be discounted compared to their German equivalents. And finally, at number 5 this week, we look forward to company earnings reports for quarter 3, starting with the big US banks. Investors will likely remain a bit on edge post Friday's volatility and will be on heightened alert for any news to do with China trade. All right, without any further ado, time is money, money is time, and I'm not going to waste any more of yours. We want to talk about the OCR. Everybody's interested in what's happening, particularly at the next meeting. So we've got credit analyst for Milford, Remy Morgan, on the program. Just a reminder, this segment is informational only and should not be considered financial advice. Remy, welcome to the podcast.
Great to be here. Thanks, Ryan.
Lovely to have you and lovely to meet you as well. Let's talk OCR. Let's skip ahead to November's meeting. What are we expecting? What are markets expecting?
Yeah, so right now the markets are fully expecting a full 25 basis point cut to bring that OCR down to 2.25%.
Great, because we've just had a double whammy, so to have a little bit more would be nice. Assuming they're right, what data, what information are we going to get before then that will inform that decision?
Yeah, so next week we will get the CPI print, which is a measure of inflation. So that will be one that both the RBNZ and the market are closely watching. We'll also get the unemployment rate in a few weeks' time. And a few other key data points in between will be indicators of consumer and business confidence. And that will also be something that will be closely watched.
Because they're weighing up that whole question of inflation's, getting up there. It's kind of getting close to the band, maybe even over it. Versus we need to boost the economy a bit. That's like the balancing act they've got, right?
Yeah, that's exactly right. So there are some expectations that we could be touching that 3% inflation, but from there it is expected to tick down. So it really is about the unemployment, the confidence, and making sure that we get things going again and reducing that output gap.
What type of announcement? Because I know that sometimes you get just a statement with the number. Sometimes you get a full press conference. What is this one?
Yes, so last week it was just the statement. There was no press release. In November, we will get the full work. So we will see the RBNZ's revised economic projections. We'll see their OCR track, which is essentially what the RBNZ are expecting for the OCR going forward. And there will be the press release. So that'll give a lot of colour going into the summer period before the next meeting in February.
Did markets get the last one right? What were they expecting for the October announcement?
So for the October announcement, the market and even the economists were really on the fence, whether it would be a 25 basis point cut or a 50 basis point cut. We saw about 34 basis points priced in. So that suggests definitely 25 was the expectation, but the 50 was really on the fence. And that had really come about as a result of that weak second quarter GDP print, which threw a bit of a spanner in the works.
It was a pretty violent jolt, I think is how I'd describe it. What did the markets make of that quarter 2 number? Because you would think when you see something that bad that they would all drop back and fall back. Did they?
Yeah, so a few things happened. So after that weak second quarter GDP print, we saw the market participants starting to reprice interest rate expectations. So that was the point when we started to see maybe there will be a 50 basis point cut in October, whereas before the market was pretty solid 25 basis points in the October meeting. And those expectations of future interest rate cuts actually helped to boost the New Zealand share market. So we actually saw a bit of a rally. We saw the NZX reaching new record highs after 4 years, and that was really an expectation of potentially lower interest rates to come.
Because it's kind of counterintuitive. When you get bad news, you think everything's going to fall with it, but they're anticipating, because of the bad news, that we will have rate cuts, therefore we will have more spending, therefore these companies will do more business.
That's exactly right. It's all about future expectations and where we're going to from here.
What about the data? You've mentioned some of the unemployment, inflation that we'll get before the meeting. We've just had the services sector update. Yes, it's a bit better, but still contracting. Same with manufacturing. When are these things going to turn around, Remy?
It's a really good question, but we're all asking the same thing. I think a lot of the problem has been everyone is sitting on the sidelines waiting for these lower interest rates to come, and it feels like there's been a lot of uncertainty offshore. We've had Trump, we've had tariffs. People are a little bit nervous. We also still have a lot of people who haven't quite yet rolled off of those higher fixed mortgage rates onto these new lower ones. So it will take a little bit of time for these lower rates to transmit through the economy and for us to get that intended effect.
Do you think some people are almost putting off buying a new couch or a new car because they're waiting for the rates to go even lower before they do it?
Yeah, I think there's some of that going on, and potentially waiting until we're at or near the bottom before they really hit go on refixing at those lower rates.
The time is now for the new sofa, by the way. All right, so what does all this mean for house prices, which we had some new numbers on in the last week? For businesses who are borrowing, this is the coalface of the OCR. What's going on here?
Yes, so if we think about the housing market, obviously, like we mentioned before, people have perhaps not really had the confidence, rates have been high. So now that we're seeing some lower mortgage rates, we might see some potential buyers coming back into the market, some investors coming back. We might see a bit more income and disposable income in the consumer pocket, which might see them going out and spending. We will see lower interest rates offered on savings accounts, which again might incentivize people to spend rather than save. And so all of this might give the economy a boost, might increase demand for housing, which might help to boost prices, increase demand for goods and services. And once businesses start to see that might give them the confidence to start hitting go on investment again.
What about Kiwi dollar? When the OCR obviously and interest rates have an impact on that because it's about demand for our dollar. It's very weak at the moment. Do you expect that will continue?
Yes, so after the OCR announcement last week, we did see quite a significant drop in the New Zealand dollar against the US dollar. But it isn't just the OCR, that's one factor. We have seen it bouncing around a bit the last few days, particularly on this news with Trump and China and tariffs. So I think it will be volatile, but it is pretty weak at the moment.
So on the whole, for those who have got mortgages, for those who've got businesses, for those who've got investments just generally, we've had a double whammy cut. We should get another one by Christmas. And now's the time to kickstart things again.
I'd hope to see that. It would be great to see things moving in the right direction. Like I said before, there's a long hiatus between the next RBNZ meeting, so the market will be closely watching what the RBNZ does in November and what the commentary is, and that will really set the tone for the summer period.
Excellent. Remy, lovely to have you on the podcast.
Great to be here. Thanks, Ryan.
That was Remy Morgan, a credit analyst at Milford, talking about the OCR, both the double cut we've had and hopefully the cut that we will have come November's meeting. Don't forget, you can follow and subscribe this podcast wherever you like to listen and share it with your friends. Until next week, don't forget, invest in yourself.